Financial Argument. Follow us on YouTube.
Hey everyone, this is Elijah Johnson with SilverDoctors.com, and with us today is James Corbett from the Corbett Report. James, thank you so much for joining us today.
Thank you for having me on.
One of the things that you reported on last month was that Deutsche Bank, you think, is actually a ticking time bomb for Europe. Can you give us an update on this and explain if this is still your view and why?
Well, to be fair, that was certainly the title that I used, but it's not one that it's not an opinion that's all that out there. For example, the IMF, the International Monetary Fund, pointed out earlier this year that Deutsche Bank is a major source of systemic risk in the global financial system, and in fact, they ultimately ended up concluding it is one of the most interconnected banks in the world and one of the most likely to cause a globally systemic, important bank failure. They actually identified Deutsche Bank by name as one of the most important linchpins in the banking system that could potentially start a tidal wave of problems. And that's for a number of different reasons, including the interconnectedness between Deutsche Bank and a number of very important, as they call them, GSIBs, globally systemically important banks like Morgan and Citigroup and Bank of America and all of the other big names that you would expect. So it is a worrying institution in that sense, and also because it has come in under pressure recently. There is a pending fine from the U.S. Department of Justice to Deutsche Bank for its role in the housing crisis, the 2007 to 2009 housing crisis, where, of course, Deutsche Bank, like many other banks at the time, were selling what they knew to be essentially fraudulent mortgage-backed securities and marketing them in ways that they should not have been doing. Now, the DOJ has been handing out fines to various Wall Street institutions that were involved in that. The Deutsche Bank fine, that is, at least the number that has been floated as what the DOJ is aiming for, is $14 billion, which is a pretty hefty price tag, especially for an institution like Deutsche, which is a large institution, but $14 billion certainly does amount to a fair chunk of change for an institution like that. And just to put that in perspective, Deutsche Bank actually, just in the last week or two, did come out with a profit. They actually did turn a hefty profit in the previous quarter. I believe it was 278 million euros was their reported profit. But still, I mean, when compared to a $14 billion fine, again, that shows the scale of the problem that they're facing. So this has put worry in a lot of investors. And certainly when this story was trending a month ago, there was significant concern. In fact, there were rumors floating around it that the German government was preparing for a Deutsche Bank bailout and things to that effect. Now, that talk has quieted down a little bit, but still, the fine is still impending, and Deutsche still does find itself in a precarious situation. And just to put that in perspective, just a few days ago, Fitch Ratings downgraded Deutsche Bank. So they have... they are still facing significant credit pressure from the markets. So Deutsche is an important linchpin in the global banking system. It is teetering, and the problem with Deutsche would be similar to the problem that we saw with the Lehman Brothers collapse, which is not just the collapse of one financial institution, but all the other financial institutions that are tied to it through things like, of course, derivative exposures. And of course, I'm sure your audience is familiar with the concept of derivatives, basically gambling on the underlying price, the price of underlying assets. But it can be an extremely complicated system of trades that, until fairly recently, was highly unregulated and highly unpredictable and unknowable. There are reported total derivative exposures of various banks, and it's up in the air to what extent these numbers are really solid anyway. But to put it in perspective, Deutsche Bank's total reported derivative exposure in 2013 was 55.6 trillion euro, which, compared to the 2.7 trillion euro of the entire German gross domestic product of that year, shows just the extent of the potential problem we're dealing with, because those derivative exposures, of course, a derivative is held by two parties. The counterparties to those derivative exposures would be left on the hook for all of those obligations if and when Deutsche Bank were to go under and default on its various obligations. Now, Deutsche Bank has paired that 5.6 trillion euros of potential derivative exposures down to a modest 46 trillion euros. So don't worry, guys, it's not quite as bad as it once was. Now, let's put this in a bit of perspective. There has been regulation in recent years trying to standardize over-the-counter derivative contracts and put them through central clearinghouses that would at least put some sort of hard figures on this and put some third-party intermediaries in between these various obligations. And on top of that, these banks generally take out hedges of various sorts that supposedly cover them in the event of some sort of meltdown. But as we saw with Lehman Brothers, those types of hedges are only as good as each step of the collateral chain that they're on. And when you have a systemic meltdown, there's absolutely no guarantee that that will mean anything. So there's still a very big question mark surrounding these types of banks. And this is worrying because it feeds into a couple of narratives, one of which is that if and when a collapse like a Deutsche Bank collapse were to occur, it would be no doubt fodder for those who want to foster the idea that there are these too big to fail banks that we simply cannot let fail because they will bring down the global financial system. So the only answer is we need some sort of bailout. And the interesting part of this is that in this situation, when the rumor was floated that the German government may be secretly preparing bailout plans for Deutsche Bank, the German government was quick to come out and say, no, that is not true. We are not preparing that, and we have no plans to step in and bail out Deutsche Bank if it comes into difficulties. But one would imagine in the event of a true meltdown of Deutsche Bank, certainly the financial oligarchs, the planners, the central planners, would not sit back and watch Deutsche Bank die. And if Germany wasn't going to step in, it is entirely plausible that the European Central Bank would step in with some sort of direct intervention with Deutsche Bank, which would be interesting and precedent-setting because I think that, as we understand, the long-term game plan is for the ECB to engage more and more directly in the individual economies of the European countries that it has purview over. And the ultimate endgame would be to have a central bank in more than just name. The ECB at this point doesn't have the ability to really intervene in individual countries and certainly not to dictate monetary policy in those countries. But we could imagine a scenario where some sort of Deutsche Bank or other European banking meltdown did precipitate action from the ECB level, which would override the actions of the individual central banks of those countries. And that would create a worrying precedent for those who are worried about the centralization of power in the hands of the financial oligarchs in places like the European Central Bank, or, of course, the implication would be to other central banks around the world.
So do you think that Deutsche Bank is just maybe one of the ticking time bombs? Are there, other banks that are in similar situations that could really take down the system?
Again, it's like a game of dominoes. I don't think it necessarily matters which particular domino falls. Deutsche Bank seems to be unusually situated to be a very likely domino to fall, but it could happen from any part of that system. And the knock-on effects of any one particular part of the system melting down is not easy to predict. And we can look at various charts like the IMF came out with to show and document how Deutsche Bank is so globally connected and why it is such a potential ticking time bomb, as it were. But that doesn't mean it's the only one out there, certainly. And we've seen, for example, talk of serious problems in the Italian banking sector over the last several months with Italian outstanding loans and non-performing debts just really getting to ridiculous levels that are clearly unsustainable. So it certainly could happen in other parts of Europe or even other parts of the globe and could still cause the type of systemic crisis that we're talking about here. I'm certainly not making a definitive prediction that Deutsche Bank will be the definitive domino to fall, but it is a likely one and it is already wobbling.
All right. Well, James Corbett, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you online?
Well, once again, I think that the answer to these macrocosmic problems are not going to be found at the macrocosmic level that most people don't have access to. So I think it's about creating microcosmic communities and fostering interaction with those, and in ways that bring people together rather than drive wedges between them. That's really what my work is focused on and hopefully driving at. So people can find out more about the work that I do at CorbettReport.com. That's CORBETT report.com.
Once again, thank you so much for your time today.